Hi, Warriors. How's everyone doing? Here we are to do it again. Patience and let the market come to you. That's the mantra this week. Let the trades come to you. Know what you want to do and be patient and let it come to you. And if not, next. Okay? Who's with me on that? Hi, Mike. How are you? Blake, how are you? Hope you had a good weekend. Paul Nash, how are you? Richard Adam, Kman, John Hawkins, Ben, who I'm going to be interviewing. Stick around for Ben Maldonado after we bat the ball around. AJ, Scott, how are you? Will? Okay. Linda Lyons, how are you? Okay. So the debate after what happened on Friday on the dollar is going to be, was that it? Was that a third drive? A three-wave advance, which people, Elliotticians would call it. They call it a just a three-wave ABC, or are we going to pull back and put in a higher low and then take out the highs before the break on Friday? So that's really going to be the debate. Um, I know that I'm going to attempt longs lower, down here, or depending upon the feed you're using down here. So we'll see. Euro, my plan was to try it up here at 16 and a half last week. I thought that, after you missed a good portion of the decline, there'd be another opportunity. I think there will be. I've seen some counts as high as 17. And so, that's really the debate. Is this just an ABC and now we're going to break to new lows and take out 96? Or are we going to pull back and this will be a wave four and it gives us a wave five to the upside? That would confirm for the bulls the structure that we have a low here. Okay, so I would say starting to negate the breakout, even if I give it a push a little bit, 97.50 would be kind of a sign. Remember this 97.70 level here? We had all these spikes, so that could be it too. Anyway, I have a mind to sell rallies in euro. Actually thinking about selling the rally in gold, maybe up around 80 or so, waiting for turnaround Tuesday.
Is
And
challenging the underside of the broken trend line today. And
the
good
gold
morning,
is
coach.
right now, right here.
Yeah. Yeah. Oh, no, no, not in silver on gold. I'm sorry.
Okay, there's
Yeah.
gold.
The
So it
gold, that's
depends.
the trend line that goes all the way back to the beginning of the year. We're basically at the underside of it right now.
Oh, so maybe today's the day.
Maybe.
Okay, yeah. Otherwise, what would you say if we close above the trend line, Blake?
I wouldn't want to be short.
Okay, all
I
right.
don't know if I'd want to be long, but I wouldn't want to be short. And I guess the other question is look at what the dollar is doing. I mean, you were just mentioning the euro and the euros had a nice rally, but we rallied to previous support. We're just kind of stalling at previous support now. So
Yeah.
that whole area around the 116 level, I mean, unless we get a nice sustained break above 116 and a quarter, I'm not really too excited about trying to get long euros up here. Europe still got problems. We all have problems, but Europe's got problems too. So, you know,
I'd rather be me than Europe right now.
yeah,
How
well,
about you? Are you glad you're
I'd
you and
actually
not Europe?
I'd rather be in Europe right now than in Arizona. That's for sure. Too damn hot here. Anyway,
Anyway, 90% of the world you'd probably rather be in. So, anyway, Ryan's back. So, welcome back,
yeah,
buddy.
buddy.
Hey guys, how you doing?
Yeah, you didn't miss anything.
Mr.
No, right
Vacation.
one.
Huh? You didn't miss anything. So, you have your sea legs back, bro?
I'm getting them. I'm getting
All
them.
right.
The
All
boat's a
right.
bit
So,
calmer today.
yeah. So, we had that Wild Friday. Um, what are you thinking here? You heard me talk about this is going to be important to determine whether or not that 96 low was it in the dollar. Which way are you leaning now? Say, for example, in euro. I know that Grega, I believe, is looking at this as an ABC right now, and then new highs coming.
Yeah, I mean, look where we are now. We're sitting pretty much bang in the middle
Yeah.
of this move. So I think right now the market's in. What happened now? Are we going to see the dollar getting sold more and the market getting a bit more dovish over the Fed? We've got this new Fed member going to be announced by Trump, and then the BLS bloke or woman being announced. So the market got a bit of a shock, after the hold at the FOMC, and then that data, it had to do a 180, and now I'm waiting to see whether the market's going to continue to get more dovish over the Fed and maybe do one of its moments where it goes a bit too extreme dovish, which will present an opportunity. I think today, tomorrow, at least the early part of this week, you've got to be looking at yields, particularly 2s and 10s. 2s just to give you that impression, or 10s. There you go, bang on that 420. I've been talking about 420, 450 for months, and we've been at the top and now we're down the bottom, and this is going to be your guide.
Actually, and the target based on this formation would be 410, because it was 430, 450, 20 from 30 gives you 410. So then maybe we're going to take out this low and head a bit lower. And I tell you what, I'm normally a bond bear, and to me it looks like it has destiny to take out this high. This looks like A, B, C, B, and then up. So maybe the market's easing for Powell or anticipation of September now. But or maybe people are getting defensive.
Could be
buying treasuries. They were defensive. It showed up in the U.S. dollar yen Friday.
Yeah. But we know the market likes to get extreme with its thinking, particularly around interest rates.
Yeah.
So whether it's going to get really dovish, start pricing in, 4 consecutive cuts or something stupid like that, then you'll probably see your bond ETF rallying up through that high. I think if the market gets too dovish, that'll be something I might scalp fade, because I don't think it's justified. But you never know.
Okay. Any comment on cable?
Apart from it's looking crap, it's in the same boat. What was really interesting was euro sterling.
I saw your tweet about that. Was your tweet, wasn't it, about euro pound?
I did one this morning.
Because
I started picking up longs just before I went away, and I did in that dip off that high, and I missed all that move being away. Just wasn't at the phone, all the way down to 86. But the speed it's come back again. It pretty much touched the 38.2 of that whole rally since May, June, around that moving average.
Oh, this retrace. Okay.
Yeah. So that was a good refresh, and the fact it's bounced back. So I'm happy to sit in longs, and I don't see any good news coming for the rest of the year. So that might also be a little bit of an influence on cable. If the dollar's strengthening, that you might see cable going down a bit faster than say the euro.
You have an upside target. There's the daily, and here's the weekly.
I think if the news continues to be bad, we're probably going 89s, maybe even 90s.
Okay, look at this. So it's not unvisited territory if you look left.
No,
we've been here before, and this was a spike. Maybe 1 or 2 trades got off on this. I don't know what, this. I remember this spike. So you still, a lot of technicians, let me throw it out there. A lot of technicians would not even count or even look at this wick. Who thinks this wick is valid, or can you trade without thinking about the wick, since it probably didn't include a lot of trading?
If you zoom that chart out a bit, you'll see how important that high is.
Okay. Here.
92, 93. Yeah. Look how
here,
monumental those highs were.
Yeah, right there. So, yeah, and there were no big wicks here. I guess this is the only other example. So
Yeah.
it's to you, it's looking bullish. Or we're just in the 93, a 10-cent trading range. I mean, is that what we have here?
Yeah, I mean that's a decent. Eyes blind, I'd be a seller up there naturally if we're up in those sort of areas, 90, 93, just because it's a huge range top, news permitting and whatnot. So yeah, he's got every chance of maybe getting up there. I'd like it to get up there being long, but we'll wait and see. Things have to get really bad in the UK, I think.
Okay, any commentary on Aussie or Canada on the commodity currencies here?
Aussie's sort of a bit in the middle. It just kept struggling, didn't it? Kept going up, then failing, going back, failing. This is probably again maybe just another trend refresh. Clear the decks a bit, build up again.
Yeah.
I'd see no reason for the Aussie to fall out of bed here. Canada, that's looking.
Hey, wait, before you move on to Canada, can you take the Aussie, just zoom out really quick, Dale? Just zoom out. There you go. That's just a channel. I mean, the lows from Friday is the bottom of the channel. Just you put a couple lines across the top, and then across those lows, you just have one big channel. That's it.
Okay, so you could be long against last week's lows.
Yes. If that's what you want to do, and you're like a dollar bear, then that's a great risk reward trade just to be long Aussies. But then again, you look at copper and say, well, then you're going to have some questions if you start looking around actually. But from a technical point of view, anyway, sorry, I didn't want to jump in there.
No, it's okay. It's the
I didn't mean
craziest
to jump
chart
in,
I've ever seen. You can jump
but
in.
Ryan's been out for like a month
out.
and a half, so I have to jump in every once in a while. Sorry, Ryan.
Yeah.
Just kidding. All right.
You jump
I'll
in
be quiet.
anytime you want. Anyway, thanks, Ryan. Good to have you back, bro.
Thank you.
Good morning, Kman. How are you?
Good morning, everybody. Good morning, Dale.
Good morning, buddy. So we had this big sell-off in yen with the weak numbers and a little bit of risk off.
Yeah.
I think I talked earlier in the day. In fact, I got stopped out the day before. What are you thinking here? More downside with the yields, or is this a level to
yields
be
are
thinking
going to
about?
be a big factor, but I still think that trade, fiscality, etc., will also play an equally big role. So we're getting this setback. The dollar will obviously yield play a big role, but if you look at the crosses, risk has been hit. The market was probably short yen, having bought dollar yen crosses for a while. So the market got a bit stunned on Friday, rightfully so. I just wonder how long it's going to last. And I'm not very interested in having a dollar yen position, but I'm keeping an eye on those yen crosses to see if they find some bid somewhere or they continue to go down in line with risk. I'm not convinced about lasting yen strength yet. That is something, and it's not my preferred dollar short if I would have to be short dollars right now. As I said on Friday, and I think it's
okay, I'm glad you reminded me of it. So trade selection, everybody.
Yeah, that's what I said on Friday. I think my two preferred instruments were the euro and gold. And I guess it somewhere reflects what the market has been doing. Barring the yen. The yen I didn't see that one, but I think if you look at also crosses, etc., the euro has been doing much better on the cross side as well. EURUSD, EUROCAD, you name it. They've been Euro Sterling as well. They've been doing pretty well. So, yeah, I still think those two are should be leaders of the pack if they pick a side. We were talking about it on the flow show. I must say, I thought actually gold would open the week even higher, but Asia didn't buy it, so we need to see what the Americans are going to do with it. The rest, it looks to me like we're trying, but we can't be overly convinced about the dollar yet because there's some dollar pairs, cable for instance, 133, difficulties to stay above. Aussie and Kiwi, bit lagging as well again. So yeah, I'm still thinking if you want to be short dollars, it's still going to be the relatively simple ones and the rest maybe gravitating around.
Okay. So the point on trade selection is Kman identified the euro as the preferred long. So it's like a singing competition. And for us, it's trade selection, and singing, it's song choice. You could have a great voice, right? But you choose the wrong song and you don't have the same performance. For us, it's trade selection. So it could have been cable or Aussie that came in said, where you got twice the beta, twice the range by the correct trade selection. It's really going to make a difference in your trading. And also, let me say this and ask you this, Kman, because you're very good at trade selection. So even if you're early, if you're in the right pair, it's more forgiving if you're early than it is if you're in the wrong pair that just runs over you.
Oh, absolutely, 100%.
So that, yeah, that gives you the staying power,
Yeah,
right?
yeah, absolutely. If you do the right selection, which requires some work,
Right.
because you
Can't be
need to
lazy.
be aware of stuff that goes on. So,
Right.
but if you get the right selection, it's exactly as you say. It's more forgiving as well.
Yeah. So that's part of risk management too, your trade
Hmm.
selection. And which you guys all know, we're having a webinar on risk management this week. So, Blake, good morning.
Good morning.
Pretty big break in S&Ps, and we came in this morning like it didn't happen. So,
Well, yeah, I think well, obviously there's a bit of recovery today.
yeah,
But I think if you look at the bounce, it's pretty nascent. So
so far,
I
yeah.
don't I don't know about chasing the market higher at these levels, especially following the data. And what we should probably do is talk about, the action of President Trump. And I have to admit, I think it, and I know this is a very unpopular opinion. I actually believe that this is actually the right decision is replacing the BLS director. Not I think the optics are bad. Obviously, like
Yeah.
you should do it on a data set that is not so, you know, you know, it makes him look bad because he's doing it right now. But if you think about all the revisions, that we've been getting, I don't blame him for wanting to switch out, the old BLS director, I forget what her name is, but anyway, yeah, I mean, it was a not a great report. There's the revisions were high, and stocks have come off, and look, we haven't even been able to hit the 38% retracement. And I've read a lot of analysis over the weekend on different private groups trying to figure out the complications of the jobs data, but now everybody's going to question, obviously, any data that's good because of the optics that Trump created by doing that. Like I said, I don't disagree with him because the inconsistencies that we've seen in the last year and a half, he just did it. His timing was not, not the best. But anyway, Going back to equities, you can see we're very shallow retracement thus far. We haven't even
Yeah.
hit the 38% retracement. So that's going to be pretty key around 6,300.
You have some downside objectives for this move, Blake?
I'm sorry. Oh,
Do you have
downside.
some downside targets for this move?
Yeah, as far as the S&P goes,
Yeah. I was figuring
yeah.
6140, the prior high, was one of them, and then like around 5920. But then if it got to 5920 and took it out, that would be kind of negative.
Well, the
So
6150 breakout point, that's
okay,
where that's that purple line right
right,
here.
yeah,
That's what's going to come into effect, and I think that's the level that you have to be really careful with on any dip, because if we break through there, then that means we have that wave 5 that we've been talking
yeah,
about.
yeah.
The whole
Thing
from
completed.
yeah, it's completed then. So you have this 3, 4, and then 5, which I thought we would reach for 65, 66, no, 65, 25, but we got to 6,400, 64 something. So maybe that's it. And if that's it, then wave 5 is done. Then we're gonna have a tough winter, fall, winter. And if you think about like the data that we just got as far as the jobs data, if it truly is, if our labor market is truly weakening, it's not going to be like a blip. It's going to be we're probably going to come into the fall, starting to show, losing 150,000 jobs per month, and everybody's going to be looking at a recession, and that's the one thing that really is going to put some downside pressure on equities, I think. So
Okay.
so
All
anyway,
right.
yeah, just some thoughts. As far as like as far as currencies go, like one of the things that when I got up this morning, I saw the Swissy, and I'm short Swiss franc. It's, as most of I've been talking about it on the week ahead video, and the Euro Swiss just broke its descending trend line, which I was looking for this week. But when I got up, I was like, oh man, that Swiss CPI must have come in way weak overnight. And that wasn't it. It was actually the manufacturing PMIs that came in well below expectations, well below 50, but well off the mark. And that's, without this new 35% tariff that they're going to be that's going to be imposed on Switzerland. And I gotta imagine that people started selling Swiss francs pretty aggressively after that data. Is that what the mover was, Ryan, when you got up? Well, when you were looking at it this morning, because it looked like the original, like the data, I'm sorry, the Swiss CPI pushed like the Euro Swiss down a little bit lower, and then right after that, it just ratcheted right back up following that PMI.
Yeah, well, I wasn't really paying attention to it, to be honest with you. I mean, it was a small dip. It was in negative territory anyway, so it was no surprise. But yeah, that's that CPI coming in. Well, you could call it a bit hotter, but it was flat on the month and up 0.2% on the year, so it's hardly rocketing at all.
Yeah. Okay. All right. And everything else is fairly. I mean, everything else is fairly quiet. We're in summer markets. This is going to be a relatively slow week as far as data goes, but we do have the Bank of England. So, I know you guys were talking about the sterling a little bit earlier, and we're not even close to our neckline, which comes up here around the 133.60 level. I'm surprised how weak sterling's actually been. And when you think about as far as like a bounce goes, we're at the 38% retracement of this whole, right shoulder that's playing out. We're not even able to get above that. I'm assuming we will, maybe as early as this morning. But why is what are we expecting at the Bank of England this week, Ryan?
Market's expecting a cut, 25 pips. But we'll have to see, because the Bank of England are playing this trade-off between hotter inflation and worsening jobs market, and all the shit show that's going on with our country's finances at the moment. So it's one of these meetings that's going to be open. We're going to see how strong the votes are, see if any of the doves are popping up looking for 50s or anything like that. and whether this is just another cut and then a little bit of a pause to see what's going on. So everything to play for in this one, but I can't see the pound going on any sort of sustained rally anytime soon.
Hey, Ryan, I wanted to ask you, do central banks and around the world, most of them, you think they're going to prefer to let inflation run hot so that the employment picture, which is what can really bring things down, doesn't deteriorate? Are they going to make the compromise, their dual mandate? What's more important? I know what they say. What do you think is the employment picture or inflation?
Well, if you're talking the Bank of England and particularly ECB as well, their mandate is prices. It is inflation. The Fed's
Okay.
really one of the only ones that does have a dual mandate of employment and inflation. But there's always the trade-off. A lot of central banks still think that any higher inflation is going to be temporary. It's all linked to tariffs. It's not going to last. It's going to fade. And if they're right, then they can, get back on the cut train to then stop the economy. But it's a big trade-off. It's exactly what the Fed's going through now. Do they cut on the economy, or do they, stay steady on the inflation data?
Can't they raise the rate to just affect inflation and lower the rate to support employment? That would be a great way of fulfilling their dual mandate.
Yeah,
that they could do both.
It's also
Anyway,
a numbers
Blake,
game. You've got to look at the rates of certain central banks. The Fed, Bank of England, still got rates up above at or above 4%. They don't want them there. They do not want rates there. No matter what happens, they don't want rates there. So rates will be coming down at some point. And then particularly it will start coming down if this inflation blip passes by and inflation starts coming down again. So that's still the end game. I've been saying it for a year and a half now. That is still the end game, that they want rates down. It's just a question of when.
Okay, thanks, man.
Hey, speaking of central banks, and thank you, Ryan. Speaking of central banks, we do have Banxico this weekend. Kman, I know you and I we like to focus on the dollar max quite a bit, and on Friday, dollar max actually rallied right to this descending trend line, right to the 618. I'm really watching the 19 level. I mean, if that breaks, that means the dollar is really going to start recovering against the dollar yen. I know you and I have been trying to play this base and playing on the long side down here, and for me, it's worked out really good over the course of the last month, just playing it on the long side. But we haven't had any follow through. So what could cause some peso weakness here, Kman? What do you think?
The acknowledgement, we spoke about it last week as well, when they had like this kind of deal going between the US and Mexico, and I was like, okay, this is not really what the market would like to see, and that's where we had that jump then in the dollar mix. Yeah, I think everybody is watching that high 1890s, 19. Mexico is expected to cut by a quarter. Will it have a lot of impact? It will depend on what we get the rest of the week. And tomorrow we've got ISM numbers out of the US, right?
Yeah.
It will depend on what the dollar does, but I think it's been a really decent bottom there, close to 1850 right now. I was short dollar makes. I cut them really quite nicely actually. So I'm happy about it. I want to see. I really would love to get that 1895, 19, the figure test and see what happens there, because we can argue, and I know it's been your play as well, that the interest rate differentials with Mexico cutting are getting tighter. But
Very much so.
I still think there's enough in there for it to work, unless the trade dispute or half agreements or so, unless that goes worse and Trump I don't know, the door on Mexico. That may be the case. Then Mexican peso will weaken for longer. That's yeah. I think we're relatively neutral right now, where we are now, and then we will see how the week develops on first of all the dollar side, and then um, not um, not getting a full deal may push Mexico perhaps to be a little more dovish, so hinting at perhaps more rate cuts to come. That is a possibility that I see for the week, but really on the tip of my toes, man. I'm not going to stick my neck out too much on Mexico this week, but they should be
Okay.
up quarter
Yeah.
percent.
Okay. Well, I want to say that when, I've seen this price action so many times over the last 3 decades. This is a hell of a base that's being built. So all you need is something to really push over the Mexican peso. Just knock it over the edge, and we'll have a screamer back towards 20. I mean, you guys have seen these types of bases set up. Like I said, those of us that have been around for a few decades, we've seen this set up 1,000 times. So all you need is give me a catalyst, give us a reason to start selling pesos, and you've got the setup here. So that's why I wanted to make sure that everybody's looking at it. A couple other things that are should be highlighted this week, as Kman said, we have the ISM Services PMI. Yeah, even though we've already got the NFP, we really need to be looking at the prices in those PMIs and the employment data as well, just because it's private sector, so we should be paying attention to it. We have New Zealand employment, which will be actually Wednesday morning in New Zealand, Tuesday night here in the US. And as Ryan talked about a little bit earlier, we have Canadian employment. And by the way, the dollar CAD, if you listen to the week ahead video, this is right at the level that I'm long, but where I think you got to be looking for longs. And we're at a 38% retracement. I know Canada's got a holiday today. I understand that, but that doesn't mean that we can't start to see some movement off of these levels, especially if the euro struggles around this 116 level that we're at today. I'm surprised how strong the euro has been at these levels, but then again, the euro crosses are actually recovering as well. So with all that being said, I know we have the wonderful Ben Maldonado here, so I'm going to pass it over to Dale. But before I do that, let me just mention, guys, remember we have a 40% off sale. This is actually quite a good uh,
Deal.
deal. Well, it's a deal, but the temperature is rising. I mean, it's going to be 118 degrees in Phoenix, Arizona. So this is really quite accurate. But our deal is really hot too, because you can lock in prices and be grandfathered in. So that means, when our prices go back up, you will maintain, at these low prices. So take advantage of that offer that's out right now, and get involved in our community. We have the most robust community I think out there right now, so you can chat with all of us, and have personal conversations with us inside of the community, and talk about what trades we're in, see what trades that we're running. Just see that Ryan's back already from holidays, scalping the hell out of the market, and you can see exactly what he's doing. So make sure you guys are taking advantage of that. And with that being said, Dale, have a great interview with Ben and Kman. Thanks for being my partner in crime last week for the F.A.C.E show and around here. And Brian, we're really glad to have you back.
Cheers, guys.
All right, thanks, Blake. K-Man, thank you very much. Ryan, I echo what Blake says, and Blake, some great looks from you this morning. And all you single guys out there, it's your only opportunity to be grandfathered. So I would suggest that you it's a great experience to be a grandfather, and this is the only way you'll be able to do it. So
By the way, Dale, this is you talked about that trend line of the
yeah, the
underside.
gold.
Yeah, I mean, yeah. If
Yeah,
you were chasing it up here when Dale was talking about it,
yeah.
I mean, it's
Great
come
call.
off there. So
Yeah,
yeah.
I know. I wish I wasn't working. I might have traded.
Uh,
Anyway,
all
thank you
right.
guys. Thanks, Dream Team. So, we do have, I'm still of the mind that wasn't the low and the gold, but now it's time for us to, you know, be open and have a sense that there's rhythm in the universe with cycles and bring in one of the better guys who has talked about things that have manifested years ago that we're seeing on our TV screens now. And Ben Maldonado, always great to have you back, Ben. I'm really looking forward to seeing what you have to say today or hearing what you have to say today.
Hey Dale, it's great to be back. You guys just do a wonderful job. I love listening every morning and always before my interview with you, I listen because the several of the themes that I'm going to talk about are sort of woven through your guys' discussion. So it's really cool.
Okay, well, let's roll.
All right, let's roll. Let me share my screen.
There we go.
There we go. So today, let's just quickly, briefly go over what we're going to discuss and talk about, and then you can come up with some your angles and your questions because they're always great and they draw out more information. So it's really good. So first, we're going to review the bigger cycles that we're experiencing right now, and what's happening with them and what we can expect and what we can look for. It's always funny because remember when we first started talking about the epic cycle years ago, Dale, it's a 400-year cycle, and they were like,
Right.
people were like, how can you trade a 400-year cycle? Well, we'll show you the results. We've been talking about gold and silver and Bitcoin for a while as epic cycle plays, and they've just been doing really, really well. So we'll
Yeah.
touch on that. We'll touch on the war cycle, the real estate cycle, which is kicking in, and I think this has serious ramifications for the economy going forward. So we have to look at that. And then a new discovery I have, I'm calling it the black swan cycle because it's a window where unexpected events, provocative events happen, and we'll go back in history and look at some of the things that have happened in that window that we're in right now. I'm also going to do a little bit of time and price analysis, Gann analysis, where using the squares, showing where when markets get to certain points, one being where we are right now, certain markets, especially the risk markets, it becomes a decision point, right? We're either going to reverse or we're going to, continue higher, accelerate, and sort of the melt up will continue. And we're at one of those points now. And I think knowing those levels can help you and the traders out there know, okay, what do the odds favor, right? And where do the odds flip? Because that's what we really want to know. We just want to create that edge. We have a Rebel Yell cycle hit this week, so we'll review that, and then we'll cover a few markets that people can look at uh, to capture some of these cycles and these events that are happening. Take advantage of them.
Cool.
So the epic cycle is the what I call the real great reset. We're at the end of one epic, which is a 400-year cycle, and we're transitioning into the next epic, which is like 2027, 2028. Where we are right now, and I think everybody can relate to these things that are happening that and how we feel collectively and individually. We're moving into the unknown because things are changing, right? Everything that we've depended on is no longer reliable. You guys were having a discussion about the BLS data and the commissioner. It's a perfect example, right? That data used to be sacrosanct, right? You got the number, everybody traded off of it. The number was good. The revisions while they were there were minor. And now we're at the point where is the data any good? People are looking at it and questioning it. And because of that, it's creating confusion and uncertainty individually for us and as a whole, as the collective whole. And that's what's creating a lot of the anxiety and the concern is because we just don't know. We don't know what we can rely on.
Were
The
you
other thing,
around when the big news, and it happened every week, how the markets would wait till Friday after the close for the money supply figures?
I,
and how they would be, you hardly heard about the jobs number.
right. I was a kid, but I do remember. So I wasn't in the business, but I do remember. I do remember my friends talking about that were working, older than
Yeah.
me that were working. That, oh, we got to check the money supply. We got to check the
Yeah,
money supply.
that was every Friday there was a
Yeah,
red number. Maybe they should revert.
yeah.
Anyway, go ahead, bro.
The other thing that's happening is we're getting so much change so quickly and so fast that planning is really difficult. On an individual level, on a corporate level, on a governance level, things are moving so fast that, making plans is difficult. For example, a couple examples I put up there, how quickly AI is developing and changing, and people are
Yeah.
saying, oh, you have to do this because of AI. And then a month later they say, well, now because of this happened, you got to try and do this. So the rate of change is so fast that planning is almost obsolete. Same thing with tariffs. The irony here in the next bullet point is we're getting more freedom, but because there's so much freedom, we're getting more disorder and more sort of chaos. And I think the current administration, no comment politically, but the current administration's a perfect example of it. They're doing
How about stablecoin playing into this? I mean, it is a new introduction to the monetary system.
it is, and to me, it feels like it's a it's a way to hang on to the old regime, right? Which is the dollar and the dollar-based system, because
Okay.
if but by doing these stable coins, it creates demand for treasuries, which creates demand for dollars. So, is it going to work? Probably not. If I was to handicap it, because we are going to have a new system, whether we like it or not. It's just how we get there and how we get to that new system. And I don't know what that system's going to be or how it's going to, operate, but it's not going to be the same as we've had for the last, 100 years, 50 years, 200
Yeah, I've
years.
been reading some things. I really don't understand it. It's outside of my wheelhouse, but that it could cause some chaos.
Yep,
Trying to, even though it's the same system, it's a derivation of the system, right? It's a way
that's right.
to eliminate cash, part of the war on cash.
Yeah, and it and I agree with you, Dale. We are going to have more chaos and more confusion because
Well,
the
I'm confused already.
what we're moving into is unknown, right? It's the big unknown. How's it
Yeah,
going to be? And I think this is what's partially creating this existential mood in society. And if you look at every single issue that comes up, oh, the democracy is on the ballot, or we're fighting for this, or we're fighting for that, but we're not fighting for whatever specific issue it is. It's all these existential positioning that people are putting. Every issue is existential, and I
yeah,
don't think that's going to get any better.
yeah. And we hear the word unprecedented quite a bit lately.
Most important election you'll ever have. I've heard that every year, every election for the last, what, 20, 30 years.
Yeah, yeah.
So anyway, the war cycle. This is one where I think we've all kind of gone to sleep on it because, the wars are have been something like the U.S. bombing Iran. It's real quick and then it's over. It's real quick and then it's over. The thing I'm looking at
Well,
is
Ukraine wasn't, and
no.
and still the market ignored all negative geo events.
Yep.
It's immune, and I think that recency bias is that it doesn't matter even if there's a conflict.
And I don't know that that's going to hold, right? Instead of looking at, how quickly they end, I'm looking at how many are popping up
Yeah,
all
every
over the
week.
place. It's like, yeah,
Who
I mean,
who
it's
would
like
think
whack-a-mole.
Cambodia and Thailand? I
India and
mean,
Pakistan. I mean, all of these things everywhere. They're just popping up everywhere. It's because we're in this sort of elevated probabilities where people resort to kinetic action. They resort to violence, and it's this it's because the might is right is the philosophy right now. And you're seeing that in policy, you're seeing that in these skirmishes, you're kind of seeing it in everything.
Nuclear subs that were probably already there, but
Yep.
announcing it. Yeah.
I mean, it's like people are calling it bullying, but it's more of, I think of it more of people feel that, okay, if I'm stronger, I can push you around. Might is right, and that's the attitude. The other term I would think, it's like the in the Wild West, in American history, the gun ruled, right? It was
Yeah.
whoever had the fastest gun ruled, and we're getting to that sort of same era
Now
that
it's
now,
hypersonic missiles.
right?
It's a fast gun.
It's about who has the best weapons, right?
Yeah.
The thing that we're seeing not only in politics but in relations, international relations, is there's only interest in having a dialogue if there's agreement on major issues. If you don't agree with me, I'm not going to talk to you. If you don't buy into what I'm saying, I'm not going to talk to you. And I think that's why we're seeing very little compromise, whether it's in, local politics or national politics here in the country, or in international relations. It's escalation over compromise. And I don't know how that's going to change given the fact that the cycles are not supporting it. So I think it's only going to lead to more wars and, unfortunately, mistakes being made, miscalculations being made that result in a much bigger conflict.
On the geo front, what are you most concerned about?
I think it looks like the Ukraine is gonna be where things really spread.
Okay.
You know
I,
that
I, yeah, yeah, all right.
that's the tinderbox that I think we got to watch.
All right, because they are moving those hypersonic move missiles to Belarus, which I heard explained as be easy to open up a front against, the Baltics, etc., Poland, from there, than from Russia.
I mean, we're not that far from direct conflict. That's why I say that's the one to watch.
Okay, all
And
right.
with this, only escalation and no compromise, I think we're, one mistake away from full blown conflict. The real estate cycle is a big cycle. It's approximately 20 years. We're currently in the phase here where, for the next 2 to 4 years, there's going to be weakness, like no growth, contraction, prices are going to come in, and housing is 15 to 18% of GDP in this country.
So
So
Ben, I think you is this revised starting this year instead of next year? I mean,
yeah,
we're three-quarters through the year, but I believe you were saying 2026 was the year that people would really start to feel it.
that's right. It'll accelerate. Remember, all real estate is local, and you're seeing
Yeah.
weakness in prices in certain markets already. But I like I said, the big thing you're going to feel is next year. And how are we going to have, a growing economy if housing is contracting? I just don't see it. I don't see how we're going to have a robust economy. And Blake was talking about, what's the world going to be like in 6 months? Do you think the economy is going to be booming in 6 months?
Yeah.
I just don't see it without housing, adding to it. As a matter of fact, subtracting from it. So
Really is it really that expression of it's all local is
mhm,
true, but it's also true that it's a global housing bubble. It's
mhm,
everywhere. It's not
yeah,
just in the U.S. Go to Europe.
yep.
Same thing. Go to Greece and see how much properties are now compared to 5 years ago.
Go to
So,
China.
well, there's a few ghost cities there.
Yeah, they're having
That's
real
the
problems.
opposite, right? So, what is happening in China could happen globally, and I think aren't they at like 50% drawdowns from the peak in China?
Yeah, it's bad. Their housing is
Mm,
bad. So, and
okay,
we're in that cycle, right? We're in the window. None of these things, remember, when you're dealing with cycles, none of this stuff is 100% guaranteed, right? You're just looking at probabilities. And when you're in these windows and these cycles hit, you have a higher probability of these things happening. That's why we look at them. That's why we study them. Here's a new one we haven't talked about before, Dale. And I'm calling it the black swan cycle. The reason I'm calling it that is there's a higher probability of unexpected events happening in this window, right? And these are dramatic, powerful, provocative actions. We're in the window right now, and it's open until August 17th. So there's say call it 2 more weeks left when we're in this window. We've already seen some provocative acts. You never know for sure until you look back what was the big event that happened. Sometimes it's obvious. Let's go through a couple of these. In 1942, the Germans started their offensive against Stalingrad during this cycle, during this Black Swan cycle, which that was the most bloody and death-producing
Yeah.
battle of World War II.
It's a great movie about it.
And it was a surprise. It was unexpected, and it really was, sort of fit the bill of the Black Swan.
It was a turning point
Yeah,
for Germany to the
yeah,
downside. Yeah.
right.
Okay. Oh
In
wow, we had some nuclear action too.
in 1954, the U.S. tested a hydrogen bomb on the Bikini Atolls at the islands out there. In addition, there was a Geneva Accord that partitioned Vietnam into North and South, which obviously led to
Yeah.
further escalation later on in the Vietnam War, which in 1966, the U.S. escalated the Vietnam War by beginning bombing in Hanoi and other cities there. So we have that connection. Here's one that wasn't a negative, and it was probably positive in the markets. I didn't go look exactly what the markets did,
Yeah, I
but
was going to ask you.
in 1989, the Berlin Wall fell.
Yeah.
Huge, right? That was a huge thing. I
I
remember
remember.
I remember that happening and going, my God, did we ever think in our lifetime we'd see that?
Yeah.
2001, unfortunately, is an infamous period in the U.S. The 9/11 attacks in the U.S. occurred during this window. And then the most recent one was in 2014. There was the Maidan Revolution in Ukraine.
Have you
So
had any of these similar time windows since 2014 produce anything?
no, this is the first window we've had since.
This is the
And
first window since 2014.
yes,
So they come every 12, 13 years?
approximately like 11 to 13 years. Yep.
Oh, that's a window that a lot of things could fall out of.
Yeah, this is not like a 5 minute time
Especially
trading a 1 minute
especially
chart.
in Moscow.
Yeah.
A
I mean,
lot of things
so
could fall out the window.
we got to
Accidentally slip.
keep our eyes open, right? Yeah, stay away from open windows in Moscow.
Yeah, yeah. Anyway, that's really interesting. Next couple of weeks. All right.
Yeah, so an important cycle. I want everybody to know about it. We're in the window now. Keep your eyes open for these kind of events. And again, it doesn't have to be negative. It could be like the fall of the Berlin Wall. So, but just keep your eyes peeled because I think we're going to see something.
Okay.
Let's go to on the intro. We talked about doing some Gann analysis. Price
Yeah.
and time.
Yeah.
The time counts with Gann when you're looking at a chart identify periods where a change in trend is likely. Again, higher probabilities. 90 and 144, along with their derivatives, are key numbers we look for. And one of the things I'm going to show you guys, which I know today was a lot the show, the F.A.C.E show was really heavy on Forex. Really good evidence that we have a bottom in the dollar. Really, really good, and I'll show you.
Yeah.
Just to show some key numbers that we want to look at for risk. August 11th, which is next Monday, is 90 trading days from the April 7th low. So plus or minus a day, you want to be watching. So Friday, Monday, Tuesday, watch price action. Do we get things changing? Do we see a lower high come in, a false break high? Whatever happens, take note around that date. August,
Full moon on Saturday.
there you go. Right in the window.
Yeah.
August 6th, which is this week, is 127 trading days from the February 19th highs in risk markets. And that gives us a high to high. So again, we have this week starting on the 6th, looking at Friday the 8th, looking at Monday the 11th. We're in that that big window we just talked about, the black swan window till the 17th. A lot of things are converging in the next week, week and a half. So we got to be uh, aware,
Short.
and maybe even be short. Like the price action we got on Friday. That's usually the precursor. Go look at other tops, go look at other places where the markets have pulled back, and we'll show, first you get the move down, then you get either a lower high or a false break high, then you get the real big move down. So that's what we're looking for to see if that sort of manifests.
Looked like a stop hunt to me on Friday.
Yeah. Let's
Took out
look at
the, yeah, go
yeah,
ahead.
let's look. We looked at time. Now let's talk about price. A lot of the work I do and the technical work I do, I use Gann squares. And you use these because they give you areas where, support or resistance is likely. If price can stay on top of a square or a key level, I called it here, then that price is support. If price gets stuck under the key level, that's resistance. Again, 90 and 144 are really key numbers here. And the really interesting thing, Dale, that I was doing the work last week for the weekly show that we did, and I saw these relationships come in, and I was like, wow, this is pretty significant. On a monthly chart, again, this is not, 5-minute charts or even 30-minute or 4 hour. This is on a monthly chart. The ES, and I'll show you the charts next, is at the 180-degree level up from the 2009 lows. So we've had a 180-degree move on a monthly basis from the 2009 lows. That's the great financial
Right.
crisis lows. And on the NQs, this is even more dramatic, I think. We're 180 degrees up from the 2002 dot-com bust lows.
Wow.
And those are significant, right? Because you're talking about monthly charts and you're talking about 180 degrees, which is,
Yeah.
two times 90. So let's take a look at the charts and you'll see what we're doing. Again, it doesn't mean we're going to crash from here. It doesn't mean that the top is in or anything like that. What it is it gives us a reference point where we can say, based on where price is in relation to this point, what do the odds favor? So let's look at ES and go through it. So the number 180 degrees up, see from the
Yeah.
square is set at the 2009 lows, 180 degrees up, basically caught the high on Friday, or what was that? This is a monthly, so that was last week, right? Early last
Yeah.
week we made that high. And
Right.
the price we want to monitor and price we want to watch is 64.48.
Yeah.
If we can clear the square, meaning we get a bar above it and the bar sits on top of it, we're going higher.
Yeah.
The next level is like almost 7,200, 71. But if we get stuck under this and cannot clear it and cannot get over it, then we're heading lower. And the next number is going to be around 5,700. That's support at this half square. It's because the major supports are full squares and half squares.
Okay.
And
Right.
these lines are not just some random lines I drew. These are 1 by 2, meaning 1 unit of price up for 2 units in time. And look at it. If we put it on the highs of the dot-com, look where it intersects.
Yeah. Return line.
And that's
Yeah.
not me playing around with crayons. This is 1 by 2. This is a geometric line. And
Okay.
then we just created this channel by, duplicating the lines and then putting them halfway down and put it on the low here. And look what it caught. Caught
Yeah.
the
Yeah.
spike low in April.
Yeah. It kind of looks like an Andrews pitchfork.
Absolutely. It functions just like a pitchfork.
Okay.
But the key,
Ouch.
again, on the monthly basis, the key number to watch, we need to get above and clear 64.48.
Okay.
The longer we stay under it, the more vulnerable we are. And you could
So
see you
there's your
could,
risk management, guys, if you want a top pick.
yeah, and you could see what happens when we hit these 45s, which are a derivative of 90. Like in 2014, 15, 16, couldn't get over it, pulled back a quarter square, right? Had this
Yeah.
correction. Up here, we tapped it, pulled back a quarter square, right? Up
Yeah.
here, didn't quite get to it, pulled back almost a full square. So here we really gotta watch because we have timing and we have a price level. The good news is we don't have to predict. We just look at price in reference to that level. Now
Great
let's look
look.
let's look at the NQs. Similar story here, right? So, but this is from the .com lows, 2002
Right.
low, right? And
Yeah.
we go up 180 degrees up, and we tapped it the past month in July. The number there, 24,036. So call it 24,000. We need to clear 24,000. If we do, the melt up keeps going, the rally's going, we're going to 26, 27,000 NQs.
Yeah.
If we remain stuck under here, 21,100, where we're heading.
That's my target.
Yep, that's where we're heading if we get stuck under. Now, what am I?
That's a 200-week moving average.
There you go. And again, same thing. Here's a 1x2, just to give you some perspective. But we have the numbers, and you know the number to watch, right? We don't have to predict. We just have to react and manage risk.
Exactly. And knowing where you're wrong is the biggest part of it.
Huge.
It's the only thing. It's really the only thing you could control.
Yep.
Is where you're going to say you're wrong on the trade, and Ben's giving you the points.
And that's what these squares give you. They give you a point where you know, okay, the odds have flipped. It's no longer bearish, it's bullish because I'm sitting on top of this. And that's what you want. The other thing, just quickly, here, 45 months high to high from the 2021 high to the current high we made. 45 is a derivative of 90. That's, again, another time marker. And this isn't 45 like 4-minute bars. This is 45 months.
Yeah.
It's a big cycle.
Yeah. Great
All right,
look again.
Let's go to the Rebel Yell cycle. We introduced this either last show or a couple shows ago, but I want to make sure we give you an update. It's a swing trading cycle, 2 to 12 weeks in duration. It identifies potential turning points or acceleration points, because sometimes, again, you have to use technicals here, because if we hit that timing point and we start making, or we continue making higher highs and higher lows, we're going higher. The next cycle hit is August 6th. So why am I bringing this one up, Dale? Again, it's another cycle that's firing off in this next week and the window, right? Again, it just means pay attention, because we don't know what's going to happen based on the cycle, but we do know the cycle's coming. These vertical lines are the recent iterations. Back here was crazy, right? In 2025, early 2025, it was nailing the turn with a big move after. These other ones have been sort of sideways or just kind of continuing the melt up. This one, if you look, has been totally sideways. But we have another one coming in on the 6th, so we want to watch price action going in and going out of it, to see what it tells us.
Okay.
The epic cycle plays, I briefly alluded to them: gold, silver, Bitcoin. I want to spend just a little time on gold, because I know you guys were talking about it. This is what gold is really doing right now. It's doing a triangle. And the triangle is a high-level consolidation. Look what it did after this triangle. Look what it did after this triangle. It does these consolidations and then goes. Again, we don't have to predict. As long as we're below 3,500, the pressure's down to 3,100, and 3,100 is 180. As long as we're above 3,154, it's bullish. Now, I know you've been bearish, Dale, but you're bearish tactically, and I think that's great, because you're kind of playing the bounces in the triangle. But bigger picture, again, this is a monthly. This is another high-level consolidation, and we know where we're wrong. 3,154 correction is on, right? And
okay, so I want to ask you about that. Why couldn't we go one more half square underneath the 3,100 and still be in a bull market?
100% will be. Absolutely.
Okay, and where is that next half square under 31?
2794.
Okay.
And that's if we get stuck under 3154, you're absolutely right. That becomes the target.
Yeah, okay. I was thinking 2,900 or so, but we'll
29, 28. Yeah, it's in the neighborhood.
Yeah, okay.
So that's gold. Let's take a look at silver.
That's been a great call for you, Ben.
Yeah, gold and silver and Bitcoin have been great. I just don't have, you never have enough of any of them. That's the problem, right?
Oh, and you always have no, there's times you have too much, but it's usually not working.
That's right. When you got a bail, you have too much.
Oh,
Here's
yeah.
so here's silver. You could see until we get above this half square, just let's call it 38, just to round it up, we're going to be under pressure, right? We're going to be chopping around and struggling to go higher. But as long as we're above this 2666, it's
Oh,
bullish.
yeah. Yeah, we're not going below there.
No. So,
Yeah.
but if we clear 38, it's $50 silver. We're going to 50.
Interesting. All right.
Yep. That's
Nice.
silver. Here's Bitcoin. Let's give you a couple of the key numbers in Bitcoin. The key one to watch right now, called it 111,000.
Yeah, because that's the prior high, right?
As
And
long as we're above that, we're going to 130, which is the half square up here.
okay. Yeah, we 110's the prior high.
Yep,
To me, that's critical. It holds for the near-term bull case.
absolutely. And again, we could correct all the way down to here to 74,000 and still be bullish because we're sitting on top of all this.
Right.
We're just talking. This is a way to tactically manage your risk using these numbers, right? If we get stuck below 111, you got to step aside and wait till it clears again, or it gets down to the 93 and clear and holds here, and then you can do it. Because remember, all of these full squares and half squares are both support and resistance. It's just a reference to price.
Okay.
All right, let's look at opportunities. We talked about a lot of these before, but I wanted to update them. I still think you can sell the builders, home builders. I still think you can buy aerospace and defense. Based on the war cycle. This is based on the real estate cycle. Commodities. I'm looking for setups to buy in sugar, cocoa, coffee, and crude. And we'll talk about the dollar last, why we think the dollar's bottomed out for now.
Okay.
Look at the home builders. The setup doesn't get much better than this, right? We talked about this one up in here, had a
Mhm.
nice move down to the full square, when it holds, okay, this is now your support, and you can see why, right?
Yeah, sure
Previous
can.
high. But look at what we've done since, Dale. A, B,
B.
C.
Yeah.
This is a perfect setup. And it tells me we might be, like we were talking about, 2026 might be the teeth of the cycle because here's your wave one down. This is your wave two corrective wave. Could be coming at three next.
Okay.
And that's the builders.
Yeah,
You
and you
know,
know
you,
where you're wrong.
you know where you're wrong. 114.44. You settle above that, you're wrong.
Okay, what's the symbol on that? Is that an ETF?
This is, yeah, XBH, I think it is.
Okay, that's it.
XBH.
All
Yeah,
right.
XBH.
Good.
All right, let's look at aerospace. It sure looks like there's a bull market in war, doesn't it?
Yeah.
Here we came down in April at the lows. Look at where support came in, right on the full square.
Yeah.
Held it, rallied up, and now look what we did. This is one of those decision points, right? You're up here and you're saying, okay, are we going to clear this or are we going to roll over and have to come back to 173 to find support? Well, so far, we're holding it. Look at the low here. 209.52 is the number. If we hold that, 245 becomes the target.
If you get a pullback to 5,700, you'll be able to buy it at the half square
Yeah,
underneath it.
about
Don't you
173.
think?
Yeah,
Yeah.
because look, there's support, there's structural support
Yeah.
there, and you got the half square.
Yeah. So, I mean, on this correction in the market, people should have shopping lists of things that are demonstrating relative strength, like semiconductors and
Yep,
air defense, and be a buyer of those on the dip.
yep, yep.
Okay.
Let's quickly go through the commodities. Here's sugar. Uh, Obviously, it's hard to call a bottom. This would be like knife catching, but what I'm looking at is we did 90 from high to low. That's good, right? That's a good time count. We had a spike down and bounced up. What I'm watching here to see is can we get a higher low? We held the half square at 1537. Do we get a higher low? Like look at a daily time frame, so you have a little more granularity. If we get a higher low in reverse, that low's good. And we got the spike and the reversal you like to see. So it's showing signs. We just need a little more evidence of a first higher low.
Yeah. And so maybe that whole thing was wave one, and this whole pullback is two in
Yep.
sugar with a higher high. All
It,
right.
Here's a Dale special. I'm looking at this as a potential 3 drives, right? 1, 2.
Yeah,
Do
got
we, do
one
we
more.
have one more?
If I
Uh,
saw the RSI, I'd be able to tell you.
yeah.
But yeah, the form is there though.
So again, we had a square out here at the low. There was a nice square here at the low. We held above this full square. We reversed. Now we're looking to see, do we get a higher low on a pullback and then get the launch here that's possible going up into new highs.
Yeah.
So
Okay.
Coco's on the radar as well.
Mandy's upset.
Coffee. I shorted coffee on this lower high. We had a nice short here. Now I'm
Wow.
thinking it might be setting up a buy.
Yeah.
Had a nice square out here. Good push off, first push off the low. Found resistance here at the full square. Couldn't clear it. So now we're coming back. Do we get a higher low? If we get a higher low, you take the trade and see if you can get a push.
Yeah. So there's some tariffs affecting coffee too, right?
Yep.
From
Yep.
Brazil.
For Brazil. Yep.
Yeah. So I don't know what impact. I think it's gonna, we're gonna pay more for coffee.
Most likely.
Yeah.
I mean, but again, we've got the levels where we know we're wrong, where we know the decisions need to be made, and when the decision's made, it's bullish or bearish. The key one here is 305. If we sit on top of 305, that means we got the low in and we're going.
Okay.
Maybe even if we don't make another high, if we get up to 350 or 380 and make a lower high, it's still a hell of a trade.
Yeah.
So that's coffee. This one's interesting to me because crude could go either way. I don't know if I've shown this circle chart before, but the
You
circles
have.
sort of, yeah, they hold price and price accelerates when it gets on the arc. You can see here how crude did it
Yeah.
multiple times with these circles. And we're now just coming out of this circle this month. And so what's either going to happen is we're going to get a bar above 71.59, which is the full square here. That means we escape the circle. When you escape the circle, you get a fast move in the opposite direction you were going. This direction was down, so it would be up as long as we can clear this full square. You can see how they act here. This circle was going up, it fell out, got below the full square, and then look what happened. This went into the negative territory. Remember when crude went
Yeah.
actually negative on the futures?
Right.
So there's two options, right? One, we clear it, we break out of the square, we clear we break out of the circle, clear the full square, we go higher. You got 101, 102 target. If we can't get above 71.59 and get stuck under and stay, on this arc of the square or right near it, we could go to 41 in crude. So
Okay.
big directional move one way or the
Yeah.
other. We know the number to watch, and that gives us the clue to which way we're going to go.
Great look.
That's crude. All right, now let's talk about the dollar, and then we can finish. Why do I think the dollar bottomed? From the highs in 2022 to the recent low, we did 144 in price and 144 in time on a weekly basis. That is a big, big cycle. The other thing that we held the half square here, right, at 95. We bounced hard off of that low, so it became like a false break low. And now
Right.
we're trying to clear above 98.24. So watch this week's bar. If the low is above 98.24 or above, we're going to 100 next. 100 and a half. We clear that, 102.
So
This
you'll be taking it one square at a time.
one square at a time, but this big cycle, 144 in price by 144 in time, does not happen very often on a weekly basis. And we had
Okay.
one. So we got the thing I'm looking for is it helps what these things help me do, these cycles like these 144s by 144s or 90s by 90. It helps filter out. I'm saying I'm not really interested in short trades right now. I
Yeah.
want to focus in. Do we get good long setups? Are we seeing higher highs? Are we seeing higher lows? Because those are the types of trades that I want to look at given that big cycle.
Okay.
And
Yeah,
that's that.
there are some people that are saying if we completed down here, that the big wave we had up to, I don't know, what was it, 114 from wherever it was, 75.
Right
And
in here.
then, you know,
Yeah.
and this was one big ABC.
Right.
And now we're launching into a wave that could be, you know, equality to what happened on the left where you first started
This one.
charting it. Yeah,
Yeah.
yeah,
Yeah. I mean, this, remember, the square went from here to here. We completed here to
yeah.
here.
And it also
So,
completed an ABC pattern.
yeah. So it's now we don't know what comes next. We do. I just
No, we
think
never do.
this low is in, and now we got
Yeah.
to see how does this unfold. Use the squares, use your technicals, use your RSI, whatever tools you have, use those to sort of stack up the odds for a decent trade.
What a great presentation with so many actionable ideas. And I recommend that you follow Ben at the minimum and watch his videos.
Yeah, we put these videos out. If you look here, it was 4 weeks ago was where we called the bottom in the dollar on that square. You can go check. It's all there. All the videos are there. You can see they're time stamped and everything. So it's not post hoc trading. This is good analysis based on probabilities. And there,
I
if you want to,
stand by it. I
yeah,
follow it. Ben
yeah,
keeps me in touch with his stuff. So
sure.
I always appreciate it when he gives me a heads up on some of the cycles and Rebel Yell. I think it would help you guys to be aware of this and start following him. And I have a new tagline for what you do. You're actually like a homeopathic trader because the most important part of your analysis is what I call, or what others call, the tincture of time.
Mm. Yep,
You know,
very good.
time, the tincture of time. They use, tinctures to heal people. And anyway, tincture of time. Time is a healer as well. And so that's why you have to be patient. You can't make the, secondhand spin around faster or have one of those calendars like in the old movies where a wind would blow about a year of days off the calendar.
Right.
Remember those, buddy?
Yeah, yeah.
Anyway, really some outstanding things to and areas and risk. It was great timing to have you on today, buddy.
Oh, it was fantastic. It was absolutely. That's why when you sent out the notice, I was like, oh yeah, I got Dale on Monday, and I was like, this is a perfect time,
Yeah,
absolutely perfect time to talk about it. So I
outstanding.
appreciate it,
Yeah.
Dale.
So follow my trading warrior brother, Ben Maldonado, at Ben Maldonado on X, and go to his YouTube channel, Plus Three Forecasting. And I'm telling you that during these times, uh, it helps to have a guy that looks at macro and monthly charts, something 99% of you never do. So that's going to be a wrap, everyone. You could always replay this interview if you weren't taking notes, and you could join the team. Gosh, I think they're already running. I ran into their time uh, on the morning edge, and see everyone for Turnaround Tuesday. Thanks again, Ben, my trading warrior brother, for edifying F.A.C.E once again.
Appreciate you, Dale. I always love your show, and the work that you guys do in edifying traders is fantastic.
Oh, there you go. Don't just count your squares, count your blessings. Mandy is, she's challenging me. She's more creative. All right. Anyway, especially on a Monday morning here at 6:18. Anyway, everyone have a great day trading. Thanks again, Ben, and we'll see everyone. I'll see everyone tomorrow.